Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise.
More money, more money, more money.
What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with a special guest today, my boy Andrei from 1 Minute Economics, 1MinuteEconomics.com, and the 1 Minute Economics YouTube channel. Is that correct, Andrei?
Sure is. Thanks a lot for having me, and thank you for tuning in, guys.
Yep. So, first off, what we want to get into before we talk to Andrei is market recap. And basically, from what I see, let's just start with the NASDAQ, because I feel like Facebook really demolished the NASDAQ last week when it basically crashed. I guess I wouldn't call it, well, anything over 20-some%. They consider a crash, and Facebook dropped there.
Yeah,
It didn't stay.
I frequently trade cryptos nowadays, and in the crypto world, we just call it a regular day. But yeah, in traditional markets.
Yeah. So, but overall, in the market like the NASDAQ, I still see everything pretty bullish. It's earnings season right now, so you might get these huge swings, when everyone's reporting earnings and things like that. But overall,
Yeah, there was this context. Okay, I've been following it also since it correlated to crypto back then when everyone was bullish and said, okay, bearish, sorry, this is the crash, the market's going to go down, this is what I've been warning you all about, and I never really bought it. And yeah, for now, I do see reasons to be bullish, and this is from the perspective of someone who has written a book to warn people against the next financial crash. But if we're talking about things from a trading perspective, I still see reasons to be bullish as a trader.
Right. I see that in, the NASDAQ, S&P, and the Dow. And I'm glad you mentioned that. That's a good segue into what we are basically talking about today. So you have a book coming out. I guess first, before we get into that, can you just explain to everyone what you do?
I'm a bit of a weird economist in the sense that, many people, when referring to economists, kind of say, oh, these are guys who just have book smarts and they don't really have skin in the game. So I'm a bit of an odd duck when it comes to that because, for example, not only do I write about crypto and study crypto, I trade crypto on 17 exchanges myself the same way. I trade exotic assets, I trade traditional markets, I have a position here locally in real estate as well. So for this reason, I'm kind of the type of economist who puts a decent combination between, book smarts from bachelor's to PhD, sure, that stuff as well, but also street smarts. I'm someone who trades. I'm someone who likes to think that he talks the talk, walks the walk as well, not just, talk the talk. And essentially on my YouTube channel, I specialize in making complicated stuff easy to understand. I just started as an experiment pretty much. What your basic stuff, what is inflation, what is deflation, what is supply and demand, but it worked, so I kind of moved on to more complicated stuff, like explaining to people how the banking system works, fractional reserve banking, or talking about the famous or infamous derivatives that many have heard about when people talked about the Great Recession. And in a way, I've kind of gotten to be known as the economist dude on YouTube. And with that does come a certain degree of responsibility. So that kind of led me to writing my new book about which we'll be discussing. And I didn't want to have this lingering feeling of guilt, for having had certain concerns, but because it's not a comfortable thing to do, deciding to just keep them to myself. So essentially, through the Age of Anomaly, through my new book, I've tried to give people kind of like a comprehensive from A to Z type guide written from the perspective of someone who wants to teach them how to prepare for the next financial crisis properly and be more financially resilient in general. Because On my channel, I kind of made a name for myself as a balanced economist who puts forth entertaining yet well-researched views. And I would assert to people that when someone like myself starts being concerned, then it's time to at least pay attention. So while as a trader, of course, I still see reasons to remain bullish on traditional markets. As a trader, I also have, aggressive positions in various spaces. But as someone who cares about kind of like the fundamentals, as well as someone who is a big picture kind of guy due to his other dimension of his life, the academic dimension, I did feel the need to voice certain concerns and kind of tell people what I think is wrong, what they should be doing, and exactly how they should go about it. And through my book, that's pretty much what I'm trying to do.
So your book is called, just to be clear with everyone, your new book that's coming out is called The Age of Anomaly, correct?
Yeah, it's already live, but I only really told my email subscribers about it, people who are friends of the channel who wanted to learn about it as soon as possible. But it is available right now. It's just that, it costs like $10. It's not a huge amount, but it's full price. But I will be having a special promo week from the 6th of August to the 12th of August where I'm practically going to be giving it away. Like it's 400 plus pages. If you make it a goal, you can work out your biceps with it as well. But but I do want to give people a fair shot at getting it as kind of close to free as they're going to let me price it. I'm going to try to kind of take over the marketplaces it's on as well and do a big promo push. So from the 6th to the 12th, you can just buy it for 99 cents, which is practically free. And also from the 6th to the 12th, if you're into this stuff, you can head over to OneMinuteEconomics, youtube.com/OneMinuteEconomics, which is my YouTube channel. I got a bunch of sponsors on board. I'm kind of organizing a contest during that week to encourage people to spread the word about my book. I have prizes like 1 Bitcoin is the first prize, but I have lots of stuff like $100 Amazon gift cards, domain plus hosting packages, just a bunch of prizes. And I'm kind of doing this major push because I do believe it's important to kind of spread the word about my ideas. And since I'm also someone with a decent level of street smarts, I know that when you're selling ideas, you're still selling. You still need to get people to listen, and that's kind of my MO. With the contest, with the price reduction, with all that, I'm trying to essentially garner as much buzz around this book launch as I possibly can, in the hope that, it's going to be a big best effort type situation to tell as many people as possible about my concerns. And yeah, that's pretty much it.
I gotcha. So, I have not read all of the book. You sent it to me, but I've read some of it. I've read a good chunk of it. And, so that's what I'm going to ask you a few questions about the book today. And if you feel like we're giving away too much information,
Don't worry about it. Sure.
Just pull the politician move on me and just don't answer the question, But, so basically, what do you feel is a financial anomaly? Because in there you're talking about you're going all the way back to like the 1800s, talking about different historical things that has happened. So what do you feel is a financial anomaly?
Yeah, I'm actually even going back all the way to 1636, which was the peak of the first recorded asset bubble, the tulip mania. And what I'm trying to say is that, these anomalies, these things which seem out of the ordinary, it's behavior that we humans exhibit that's not in line with what we expect to be the norm. And what I try to teach people by going all the way back to the 1600s, and of course going from there to recent case study examples like the dot-com bubble, like the Great Recession, even ones that I'm pretty sure I'm the only economist who studied the short domain mania of 2015 to 2016. So I do all of these things to kind of give people a proper historic context and explain that these anomalies, these illustrations of erratic behavior, how we go from being overly euphoric to full-on panic mode, these are not new. And of course, history doesn't people like to say that history repeats itself, except it doesn't, but it does rhyme, And kind of by having a firm grasp on history, you get a glimpse into human nature. And that's my goal with the historic context dimension of my book. Teaching people that, look, this is who we are, this is what makes us tick, and kind of like by having a firm grasp of what happened in the past, and drawing the proper conclusions, finding common denominators, and so on, we're going to end up realizing that there is some method to our madness, and it's precisely this self-awareness that I feel is going to do a great job at helping people position themselves so as to, withstand anything the economy throws at us.
I gotcha. So, why do you think there's a financial tsunami about to hit? You mentioned that a little bit in your book. So why not just ride the bullish wave right now? We were just talking about, Facebook, how it dragged down the Nasdaq a little bit, but obviously everything is still bullish. So why even, why not just make your money right now, and then something when you see something that begins to happen, then get out.
Well, the thing is, the two dimensions are not mutually exclusive. Like that's why I've mentioned that short term on the markets, I'm still bullish, and the same way, like on crypto, I have 12 point X leverage long going on from an average between two orders of 50. 59.96 on BTC, and if you look at the current price right now, hey, that's doing great. So I'm all about making my money now because again, I'm a hands-on guy. I do trade, I do pay attention to that part as well. But once again, as history teaches us, it is far better to start preparing a year or two even too early than being a week too late, because it's a dangerous game to play. Assuming that don't worry about it. Once things are going to start unfolding, I'm just going to adapt quickly. In an ideal situation, yeah, but I'm not sure that's the best strategy. And right off the bat, I want to tell people that as someone who even trades cryptocurrencies on leverage, it doesn't get more degenerate than that. So as someone who trades as someone who even trades crypto on leverage, I'm not exactly the type of person who's easily spooked by something like a 60% market crash or whatever. No. So what I fear, because it's important to articulate what exactly I mean by financial tsunami, I I'm not afraid of a 60% market crash. No, I'm afraid about what's coming next. Because look, only once has it happened that more time went by between recessions than right now. And if we go another year without having a recession, it would be a record. So yeah, from a cyclical perspective, if you will, we're kind of due or overdue a correction or even a crash. But again, that doesn't worry me because that's just the business cycle. It is what it is. What worries me is what happens next. And more specifically, what worries me is a major change in narrative. Because if we take not one step back to the Great Recession, but two steps back to the dot-com bubble, we're going to see what the narrative has been so far. And it has been something like, hey, the dot-com bubble popped, everyone's panicking, but don't worry, central banks and governments have it all under control. And they did. They did something. They lowered interest rates from 6.5 all the way to 1%, which doesn't seem like much now, but it was huge back then.
Right.
And of course, quote unquote, the day was saved. But it came at a price because you started to get the market hooked on this stimulus type mechanism on cheap money. And it's precisely this easy access to cheap money that, of course, as we know now, facilitated an even bigger bubble, the real estate one. Now, fortunately, from the dot-com bubble to the real estate one that popped, interest rates climbed back up not to 6.5% again, but to 5.25%. So a decent amount nonetheless. But still, that popped. Once again, everyone panicked, and the same narrative was pushed. Don't worry, central banks and governments have it all under control, except the market demanded a more aggressive dose of stimulus. So in the US, it was no longer enough to push interest rates down to 1% again. They went down all the way to zero, and over in the European Union and Japan, they even went negative. Even more so, from 1913 up until the Great Recession, so in almost 100 years since the Federal Reserve appeared in the United States, the monetary base had reached $850 billion or so. And not only did they have to lower interest rates, but at the height of their pumping money into the system directly, which they also did, they essentially injected in the US 85 billion into the financial system each year. We multiply that by 12 and we realize that in 1 year, more money was pumped into the system, approximately $1 trillion at the height of QE, than had existed after almost 100 years of central banking. So right now, the monetary base from 850 billion prior to the Great Recession is sitting at around 3.8 trillion, down from, I think, a peak of 4.1 trillion in 2014. So the things that keep me up at night are simple. I'm afraid of what happens when this narrative changes because, yeah, again, we're going to have another crash. People are going to once again panic. And if you're the head of a central bank or a government, the last thing you want is to be that guy, the guy under whom it all collapsed. So they have every incentive in the world to want to push the can down the road for another business cycle, which they probably will. Except at one point, maybe they're going to say, "Hey, don't worry about it. We have it all under control. We're going to lower interest rates in the US to -1% and pump 4 trillion per year into the system instead of 1." My main concern is that the market is eventually, and the narrative changes from "don't worry, governments and central banks will bail us out" to "who exactly will bail out governments and central banks?" And it's precisely that narrative change that leads to a big reset type situation due to the immense confidence lost that's bound to happen. This tends to trigger, and it happens a lot throughout history, this does tend to trigger a major transfer of wealth type situation, and the average person is usually on the losing end of it. So what I'm afraid of is not your run-of-the-mill business cycle induced market crash. No. I'm afraid of something, generational defining, something that's going to have repercussions on the banking system, on the monetary system. And this is why I tell people, by all means, make your money now. I know I am. Like, do your trading, whatever it is you do, make that money, keep making that money for as long as it's humanly possible to do it. But at the same time, be sure to look in the other direction as well every now and then, and take some form of meaningful action to kind of protect yourself for such scenarios. Because if you wait until other people start panicking, then you can have the smartest economist in the world by your side, and he's not going to do much for you. Whereas if you do these things early on, it's just an amazing asymmetrical opportunity. You can achieve so much with so little. And that's the idea I'm pushing to people. That's why for my book launch, I'm all over the podcast scene. I'm going to be all over YouTube as well, spreading the word about these things to anyone who cares to listen. Like, it's not my intention to make people stock up on gold, guns, and ammunition and move to the hills. No. What I do want to tell them, however, is, look, for these reasons, A, B, C, D, F, G, this is what I think is going to happen, and this is how you should be preparing yourself within reason. So I think it's a decent value proposition to make.
So you're talking about, you're not only talking about like a stock market crash or recession, you're talking about kind of like everything?
As someone who grew up in Eastern Europe, maybe more so than people from developed countries like the US or Germany, I've been fortunate or unfortunate enough to witness that the system doesn't always function, the quote-unquote system, because of course we're tempted to believe, especially those who live in developed countries, that we have these many robust independent institutions which safeguard against one another, and the entire system is just so strong. But it hangs on, and I've learned this firsthand, by a thinner thread than people realize, and to a significant degree, that thread is represented by confidence. Whether we're talking about our banking system, like I, for one, cannot think of one bank in this world that would survive if 3 out of 10 people ask for their money back, as I explained on my YouTube channel when talking about fractional reserve banking. The same way, the monetary system is heavily confidence dependent as well. And yeah, it's kind of like Nassim Taleb's Black Swan theory example with the turkey. A turkey is fed by its owner each and every day, and with each day that passes, the idea is reinforced that the human is the best friend of the turkey. Until one day prior to Thanksgiving, the turkey realizes it's not exactly true. And it's precisely this risk, of one Black Swan event or another, kind of turning things around far faster than, in a way that exceeds our ability to quickly adapt and quickly find solutions. This is kind of why I tell people to start thinking about these things and preparing now when nobody's panicking.
Mm-hmm. So, in your book, you talk about, Bitcoin, which you said you trade right now, peer-to-peer investing, angel investing. We know that you have experience in Bitcoin, but what about like peer-to-peer investing and also angel investing? Do you have experience in those areas also?
Not particularly, no. The person who wrote the forward of my previous book, Eric Borgos, who sold board.com for $4 million, and then he's just an insanely successful guy. But being based in the US, he has access to really decent platforms for peer-to-peer stuff. So he has been heavily into that space for a long time. Personally, and I do mention this in my book, it depends on where you live. Like, if you live in the European Union, you don't exactly have that many awesome peer-to-peer lending type products at your disposal. There have been many experiments over here in Europe that have failed miserably. So personally, while I did do my best to research them and give people, the best picture I possibly can, especially since I'm in touch with Eric and he has quite a bit of insight into those as well. It's not something I have done a lot of, for the simple reason that I don't have access to decent options in that space.
Oh, okay. I gotcha. But you did give some, I know in your book you gave some decent advice. Like, you don't want to get into angel investing if you're going to need, cash right away at any time. Because, you're not going to get it. It's not liquid like that.
Yeah, like when it comes to these things, like I do kind of leverage not just my knowledge as an economist, but also my experience as this dude who I've owned 3 hosting businesses. I sold all of them in the meantime. I owned a small escrow service that got indirectly sold to escrow.com. I had an auction platform. I had a digital brokerage service. So I was kind of in touch, and I still am to this day pretty much in tune with the tech space. And yeah, that does give me a bit of experience to talk to people, especially a bit of experience to kind of act as a counterbalance to this craziness that's all over Silicon Valley and the unrealistic expectations that people have when it comes to the tech space and all that stuff.
Right, right. So also in there, you talked about day trading, and you basically said, people should not be day traders. But, we had someone on this podcast last week that make a pretty good living day trading. So why do you feel like day trading should be taken out of the equation when, trading the markets?
Whenever someone asks me about how to make money, I especially as a person who's been involved in so many industries, I can say there's definitely tons of ways to skin the cat. And whenever you're talking about any occupation, it's easy to find countless examples of people who do well even trading penny stocks at the end of the day.
Mm-hmm.
But with the age of anomaly, I kind of try to make it clear to people that day trading is not for everyone. Now, this is from this perspective of someone who actually trades. But whenever you do something, whether it's starting a business, whether it's investing in crypto or whatever it is you want to do, the number one rule is always that you need to know what you're getting yourself into. Like if you're into day trading, you need to know what exactly do you want to day trade. Okay, who are you up against? Who are the big players? Who are the market makers? What's the equation look like? And how well positioned are you to develop an edge as a day trader and to do well as a day trader, which means not having a few successful trades, because there are tons of people who have that, but rather what exactly makes it so that what exactly makes you well positioned to do well in the long run? Because that and what I try to tell to people is, sure, if that's your thing, yes, but don't make the mistake like many do to go into it with huge expectations of getting filthy rich, whereas yeah, of course, I keep in touch with tons of day traders. I keep in touch with people who some of them trade options. Some of them are even more active when it comes to trading crypto than I am. But what these people have in common is that they're maniacs. They are maniacs who do this day in and day out. They eat, they sleep, they breathe those markets. So that's are you prepared to do that? Like, if you're prepared to genuinely do what it takes to be a good trader, then by all means. But what I do want to stress, and I told people in my book as well, is that most people are not well positioned to be successful long-term day traders. Mm-hmm. It's all a matter of mindset. It's all a matter of, the right combination between work ethic, being willing to put in the work to become good enough, and also having kind of like the proper personality for something like that, which is also extremely important. So it is ridiculously difficult to have longevity as a day trader, as pretty much all day traders can attest. So just like what I tell people when it comes to crypto, sure, there's tons of money to be made for sure, but you had better know what you're getting yourself into.
Right, right. Um, what do you feel the future holds for the financial markets in general right now? Because I know I don't feel like you're a doom and gloomer, but I do feel like just reading your book, it's more like what you were saying earlier. It's more like getting prepared for like a downturn. And me myself, I understand that things like that can happen, but I'm a person who I don't worry about things I can't control, and that's something that I can't control. I just kind of like read my charts, look at support and resistance, and then, buy and sell at those levels. Even if there was a market decline, there's still money to be made in that, in a decline as far as with put options, short selling, things like that. Even getting into some of those ETFs that short the market if you want to play a safer bet in shorting, I guess. So what do you feel in general the future holds for the financial markets?
Well, right off the bat, I do want to tell people that again, these things are not mutually exclusive. But
Mm-hmm.
what I do, I can tell them what I do. Like for example, even if the markets go berserk and for one reason or another, I won't be in a position to make any moves due to regulation, due to whatever short-term measures are taken or whatever.
Mm-hmm.
I do, for example, have exposure to real estate over here, rent producing properties. So those rent producing properties are something that might help me, for example, land on my feet. Even if my income from various other sources dry up, sure, that income might take a hit, but it still exists. The same way I have other projects, each of them generates some income. So even if individually, in each case, I'm going to take a major hit on my income, I'm still going to do well. And what I try to push in terms of philosophy when it comes to these things is, of course, there's little incentive to be to have a chicken little type strategy where you just scream, oh my god, the sky is falling. There's no value in that. What there is value in, and you're 100% correct, you cannot control these things. You have no way of making it stop or making it come sooner. What you can control is how you position yourself. And the number one thing I try to teach people in the age of anomaly, especially in the second part of my book, and you can attest, I'm sure, to the fact that it's the number one trait of successful day traders, people who survive for many years in the space. It's humility. Like I've mentioned Eric in my previous example, who sold board.com for a bunch of money. And when it comes to all of the people I've met who have been insanely successful, the common denominator has pretty much always been humility. And what I try to push when it comes to our philosophy, when it comes to these things, is the idea that you need to be humble enough to understand that even someone like myself, due to the nature of my occupation, I do have to think about these things quite a bit. But if I don't have the humility it takes to admit that even I might be taken by surprise by whichever black swan event ultimately ends up triggering this, then my strategy is deeply, deeply flawed. And this is the reason why we're doing this, because of course the simplest approach, like you said, would just be watching the charts, paying attention to the market, and just, assuming that you're going to be able to adapt. Except I wouldn't be so sure that's going to be possible, one. And two, even so, as for the sake of redundancy, it does make sense, I believe, to put in place a strategy that's kind of more robust than that. Because when it comes to my real estate exposure, it's not something that happens overnight. I had to hand pick properties, I had to negotiate, I had to close the deals, I had to get them back in shape so as to be in a good position to produce long-term revenue for me. These are things that take time, the same way some of my other projects have taken time to set up. So therefore, this is what I'm trying to do when it comes to teaching people how to prepare. Some things take time, and positioning yourself properly is going to take time, which is why I'm here on this show right now rather than when everyone's panicking. And at the end of the day, one, if you do it right, these things are going to generate dividends anyway. You're going to be making money anyway. So whether there's a crash or no crash, my rent producing properties are still going to produce rent.
Right.
Whether there's a crash or no crash, I'm still going to make money from a bunch of projects. But there's just a ton of value in putting in a little bit of work to set these things up, to become reasonably diversified, to have access to to have exposure to assets that complement one another nicely. And this does give you peace of mind. And that peace of mind, of course, makes it possible for me to be a degenerate when trading Bitcoin, for example. Because I know that I've got my bases covered. I know that I'm financially secure. I know I have systems and strategies in place that increase the likelihood of landing on my feet. So if I see an opportunity like I've seen with Bitcoin when it dropped to sub 6,000 for a while, and everyone was panicking, and there were tutorials on CNBC on how to short Bitcoin, and everyone and his dog was short Bitcoin. That kind of gives me the opportunity when I spot such opportunities to act like a degenerate, and I'm still holding that position, for example. So even when it comes to your day-to-day activities as a trader, as someone who's following the markets, having this solid foundation when it comes to strategy that's robust and just so sustainable, it gives you additional peace of mind, and that peace of mind gives you freedom, and that freedom enables you to, of course, be a better trader.
Gotcha. Um, so we're probably gonna close it out here. We're hitting that 30-minute mark, but do you want to plug in your book website one more time? Let people know where they can follow you on social media.
Sure. The easiest way to get in touch with me is to just head over to youtube.com/1MinuteEconomics. And as far as the book is concerned, if you want to buy it now, you can find it on Amazon, Barnes& Noble, iBooks, and Kobo. Just search for The Age of Anomaly. It's all over the place. If you want to wait until it's discounted, it's going to be at just 99 cents from the 6th of August to the 12th. And speaking of that week, again, if you want to spread the word about it or just win some awesome prizes, you should keep an eye on my channel. Maybe go over there and subscribe now. And during that week, maybe you're going to win the Bitcoin, the top prize. Maybe you're going to win some hosting, some domain names, and some Amazon gift cards or whatever. You might want to do that as well. So I generally hope people manage to extract just, a ton of value from our conversation. And yeah, have a great day, guys.
Yeah, it was good having you on, man, and we're gonna have to check back with you, make sure that your book is doing well. Maybe we can have you come back
Sure thing.
on, talk about a few
Would be
more
happy to
things.
come back on again. Sure.
Um, Make sure you can follow me on Twitter, StockTwits, Instagram, anything at Camboni11, and also join our Marathon Money Facebook chat. Uh, that's growing well, and there's a lot of good information in there from a lot of different people that trade different things. So, all right, until next week. Thank you, Andrei, and we will see you. Peace.
Take care.